Hello everyone, welcome to another lesson on technical analysis and trading. I've received some requests from some of our traders to discuss a little bit on Forex and a few tools that we can use to identify trading levels, reversal point, profit targets, and stop loss targets. Probably most of you have known by now that we use extensively the pivot points, the Elliott wave theory, and the Fibonacci ratios. And I will not stop today and discuss all of them, but pick only one. Let me delete everything I have on this chart because we must start with a clean layout, and I will add the indicators again for you from scratch in order for you to see how it is done. So at the top of our trading system stands the Elliott wave theory. So if I'm going to post the core components of market analysis that we follow, it goes like this. At the top, we have for short Elliott wave principle theory. Then moving forward, we have Fibonacci ratios. These include the retracement, the Fib retracement, and extensions. Then we have moving averages, trend-based indicators, TI short for technical indicators, and we use the 50 simple, 200 simple, 20 exponential. Lastly, pivot points. Fibonacci pivot points. Always it's worth mentioning that this is Fibonacci pivot points method. And in here, we use three: daily, short, daily pivot, weekly pivot, monthly pivot. In this lesson, we will focus on the fourth point, the Fibonacci pivot points. What are they? How to add them into the chart? How to trade with them? The goal of the pivot points is to identify hidden support and resistance areas in any given chart. That's what they are. They are static support and resistance levels that take into consideration the previous session high price, open and close price, opening and closing price. And in TradingView, this is a charting software that we use, which allows us to input this indicator. You may use your broker's account, but make sure that it gives you the option to use pivot points or all of these four components of our strategy. TradingView has them all. It's one of the best software tools that we use for charting. Let's go to the indicator section, and you will search for pivot point and select standard. You will select this 3 times because we need it for 3 sessions: daily, weekly, monthly. Let's add it 3 times. And you will find, don't be scared from what you see on the chart here, because we will adjust it and it will look much better. You can click on, let's start with the first one, click on the ribbon here to open, to extend the settings bar option, and then we will change a few details. The first pivot will be a daily pivot, always based on the Fibonacci method. The color that we use for the daily is orange, as it is. Let's leave it as it is, and we will unselect the other support and resistance levels based on the pivot. You can use them later on, but first you need to understand how to trade with the pivot itself. And after a few weeks or months, you may advance your strategy and scalping. If you're a scalper, you may need this, but not for now. Okay, number of pivot back shows how many daily pivots you want to study from the past. So we will have only one for the day, which will show us the current session's pivot point, and we'll proceed with the next one. which will be the weekly pivot. I use a blue color for the weekly pivot, and also I don't keep the rest of the levels on the chart, instead only the pivot. Number of studies back, I need 2 weeks of study. I need the current week from Monday to Friday, and I also need the finished week, last one, in order to refer to, in order to find possibly entry points, trading areas, or stop losses. Now, if we will see how it looks later on. For now, just put this 2. You can put 3, 4, 5. You can leave it at 1. But from our experience, keeping 2 weeks of trading range is quite successful, or it tells you a little bit more about the price action. And thirdly, we have the monthly pivot. Let's adjust the settings for that also. Number of pivots back again, 2 this month, April, and last month, March. Keep only P, change color to black. If you have a black background, monthly pivot should be white. And this is it, we are done. And the pivot points are visible now on the chart. We will lower the time frame for you to see where the levels are. Again, these are the 4 components of our trading strategy. At the forefront, we have the Elliott wave theory, followed by the Fibonacci retracement and extension. And then to confirm our view from point 1 and 2, we use moving averages, the ones you see here, and the pivot points. I will delete this now, lower the time frame to 2 hours, and hide this, and then let's take a look. This is euro dollar 2-hour chart, and the pivot points to the left. Maybe we can put the label on the right. Let's put the label to the right for left. Wait, hold on a second, I need to check on something. Left, it's always on the left. What? They have updated the indicator lately. The numbers are overlapping with the line, which I don't like. Okay, this is much better. Tradable, readable. Okay, order of importance goes like this. The monthly pivot is more important than the weekly, and the weekly more important than daily. Why so? Because each of these periods are different time periods. Like monthly covers 20, 22 trading sessions, a weekly only 5, and daily only 1. So an overall trend is more significant on the monthly pivot than on the daily. So the daily pivot doesn't tell us that much. It only tells you what is happening for today, where is the today's support and resistance, and the weekly tells you where is the weekly, Monday, Friday support and resistance, whereas the monthly, it will stay there for a long time. So when you open the chart and you see a new month coming in, let's go back to 1st of April. And there we have, back then, 1st of April, the pivot point structure, but focus only on the monthly pivot. There we have the new updated monthly pivot at the beginning of a new month. And here we have March monthly pivot. What it tells us is that last month, the sentiment in euro dollar was down. Price opened the month lower and continued to trade lower, and then we had a kind of a pullback close to the pivot monthly, but it didn't reach it, so we're still below. That means in a higher time frame context, the trend is still down in euro dollar. Therefore, it is safer to look for sell positions than buy trades for the rest of the month. But we have a new one. So you need to see what this week will, how this week will develop, what will happen in the first week of the new month, because that is usually the time where we understand the next big trend for the month, the first week of a new month. And here we have the level at 110.39. We also have the daily pivot and 2 weeks trading range. 2 weeks. Let me put this box right here. So that's a huge support zone coming in on the first day of April. How can I find the trading setup? I'll continue to perform my analysis. I extensively use channels into the analysis. So this is also a corrective channel. Anytime you see there are different channel types. You have corrective channel, base channel, and impulsive channel, impulse channel. If price action is contained within the two bounds of the channel, then the price action is mostly corrective. What does that mean? It's just correcting the previous move. The previous move was down, and now we are inside these two parallel lines, which means that whatever this bounce was, it wasn't a new trend. Up to now, it's still not a new trend. It's probably a correction, a pause in the previous down move. In order to resume the previous down move, price must break below the lower bound of this channel to confirm and increase the chances that we will go back down. Also, a break of that lower bound of the channel will also be a break below the monthly pivot. We're not focusing on the daily and the weekly for now, but only for a monthly. And let's see the first week of April, how price action develops at the monthly pivot. Logic is simple. If price closes below, you only look to sell. If above, you look to buy. And then we'll discuss the targets. Let's fast forward this. Okay, we are still on the first week of April. So first week of April is from the 1st until the 8th. Until the 8th. Let's put a vertical line too. All right. So that is the first week of April here. If we see price action breaking down below the monthly pivot and then holding below the monthly pivot during the first week, then we only need to continue to sell that market. Now here we have a clear, strong breakdown. Step number 2 is to position ourselves in the direction of this breakdown. We also have a breakdown below the lower bound of the channel. Therefore, I have 2 strong reasons to support my bearish bias. I want to sell this market. I want to sell it at 110. If I didn't engage in a sell earlier on that big drop, I'll look for a pullback to 110 or 110.30, 110.20 in order to sell. So the entire reaction, anything that could happen from now later on the rise, for me will be seen as a sell opportunity, not a buy opportunity. If I want to sell, I want to keep the stop loss above that area. So probably I'll keep the stop loss below 110.55. And let's see what happens. Do I get a chance to enter the market during that first week or not? Because there we are. The first week is now over and a new week just started. As we see, the retest didn't come. Most times it comes, but when there is an important or strong trend, it's very difficult for us to get an ideal entry. Therefore, if you are a short-term trader, always keep your eyes on the 15-minute time frame. Keep both charts open at the same time. TradingView has that option. You can break the layout in 2 screens, and in one, for example, to the left, you put 15-minute chart, and here whatever, 2 hour, 4 hour, or daily, whichever is best for you. And that will help you to catch these kind of moves. Now that we have confirmed the trend for this current month, also for the month of April, you'll continue to continue to trade on intraday basis, on the short-term basis. The trend is down. I don't want to buy because there is no stop loss to buy this. And moving on, I will use the weekly pivot now to identify my entry points and my stop losses. So we have this new week and we have this weekly pivot at 109.2. If for the rest of the week, Monday, Friday, price remains below that level, below this area, let's put it in another way, I continue to sell. I want to sell. If we break above that level, then the market will expose the previous level, the monthly pivot that we wanted at this area up here. Let's see how it goes. We have a test. On the first time, you can always try to short. So if you had a sell limit there at 109.20 with stop loss at 0.950, the order would have been filled. You are still in the trade now, 40 pips into the money, 50 pips into the money. The target will be the previous low. If you don't have any other methodology to find targets, then use the previous support and resistance areas for your target, or just use the moving averages to stay in the trend. We use Elliott wave Fibonacci to stay in the trend and adjust the stop loss accordingly, or scale out, take some profits. But 50 pips for an intraday trade is a great trade. Up to now, you have that winning position. It's up to you if you want to remain and hold in the position in the trend or not. I would prefer to take profits at this low at 0.8, at this low 0.806, and then wait again for a bounce to maybe the next weekly pivot or next daily pivot. Okay, so euro is there now, so it's very close to that low, still down. Daily pivot for today 108.50, weekly pivot 109.20. There is no reason to become a buyer. We're very close to the previous support, which many traders will think, okay, it's support and it will hold, we will buy it. And that's why it's going up now, because that's the mindset of some intraday traders. The support is there and we are buying it. Yes, you can catch a few pips, but there is not enough evidence to support that this is the bottom and you will get a big move up. First evidence to give you that green light will be a breach above the daily pivot at 108.50, and then it will be easier for the market to have momentum to gain some farther positions, farther traders, and push it up to the weekly pivot. For now, it's a no trade area, or if you were a seller, just hold and for a breakdown of the support. So that is how we use the pivot points to identify where is the longer trend. Is it up or down, or is the market just ranging? We use the monthly pivot to find the primary trend. Then you use the weekly pivot to find the short-term trend for only 1 week, and you use the daily to find the very short-term trend, the intraday scalping trend for you to remain in the core position. If I'm a swing trader and initiate a trade based on the monthly, I will use the daily and the weekly to adjust my stop losses and profit targets. That's the picture in dollar, euro dollar. Let's take a look at pound dollar, which is similar. It is similar to euro dollar. Beginning of month, April 1st, we opened up. Where is March? Okay, so this is March pivot point, clearly down, a downtrend. We bounced a bit, It raised like 50% retraced of that down move from March, and it failed again. So we have a 2 weeks weekly pivot period here, making lower lows and lower highs. That's clearly another downtrend in the short term. Therefore, we will maintain our bearish bias in pound dollar. Although it is worth mentioning that from Elliott point perspective, we're looking for a bottom, a higher degree bottom in pound dollar. And that's why selling into this moment could be a bit late. So if you are still a seller, you may hold into a position, but becoming a new seller won't be that easy. This market has been going down forever, and we're looking for a big reversal soon, very soon. It's just around the corner. This is a falling wedge pattern also that can make it difficult for all the sellers, and we can see a big squeeze to the upside in the days or maybe weeks to come. This is the falling wedge pattern. Usually it's a reversal pattern, and it's followed by a swift move to the origin of that pattern. So pound dollar could just go in the weeks to come if the lower bound of the trend line holds, or if it doesn't break that strongly, we can see a big swift. But nevertheless, we were just talking about the pivot points. There is no confirmation yet that the bottom is in. We need to see price breaking above the weekly pivot at least at 130.60 to think that the bottom is in, and then look for pullbacks to buy and hold for that big push up to 132, 132.40. Yeah, so we have first hurdle here, then we have the second resistance right here, which I don't think will be that strong of a resistance. For me, the 36 is the first one, and then right away, if we break that, we'll go to monthly pivot. Yes, the 31.20 was an important level last week, but from Elliott wave perspective, a breach of 130.60 would invite a strong push higher to monthly pivot, one step at a time. For now, still holding below the trend line, still holding below the daily, below the weekly. Therefore, if you are a short seller, if you are a seller, just remain in the position, but be mindful that anything above 130.60 would open the path for higher prices. And moving on to dollar yen, this was quite a beautiful chart, textbook chart. Let me show you the Elliott wave analysis that we had in here. If you haven't read our articles on Elliott wave principle and core patterns, I suggest you go and read that article. It's not a beginner's guide. It could be quite advanced for many people, but it's one of the best forecasting tools to understand market psychology and the patterns that unfold due to that. So we are tracking a top, a fifth of a fifth of a fifth. That means that a substantial reversal is probably around the corner in dollar yen. Maybe it will take a few more days or a few more weeks. It depends what happens in this wave 4 here. But the next reversal will be substantial, at least a move back to this wave 4, blue wave 4 target at 121, which will correspond with a monthly pivot for April, which has not been tested at all for this month. Let's go on clean chart without Elliott wave notations, and this is the pivot point structure on dollar yen. We open a new month, we continue to hold strength. March was the breakout month for dollar yen. Probably just continued up because of the inflation thing and the monetary policy from the Fed. They just started to shift. into a tightening period now, with interest rates increased twice and probably more for the rest of the year. So market is just pricing in that information. Once this info is done and dusted and it's already in there in the market, then the opposite should happen. So it will become old news. Probably, I think by end of spring, we could see a major top in dollar index too. Anyways, this is the monthly pivot for April. It has not been tested. A monthly pivot that has not been tested, I've not seen a case that the price remains far away from the pivot for the month and not tested. And we are in the second week, and we have 2 more weeks. So I think in the next weeks, we could see a big move down with one goal: test the monthly pivot and complete the pattern in the auction. In order to believe or think that we have a top in dollar yen, I would prefer to see a price break below the weekly pivot, below this support, or maybe we can use a box. So a breach below this area would give credence, would give more weight to this scenario that probably dollar yen has topped. Unless we see a clear break below 23.74, 123.74, there is still no reason to believe that there is a top. This could be just the trend ongoing, pausing a bit, and then going up one more time towards 28. If you use the channeling technique, we can go like this. It's a very tight upward move inside the channel. I don't think the uptrend is done yet. However, a breach of the lower bound could tell us something more. The daily pivot is the first support for today, 25.30. If that continues to hold in the next hours during the US session, the market will slowly go up and up and up until it makes a new high. However, a breach below the daily pivot will expose the weekly, and a break of the weekly will expose the previous week's pivot, and then the big monthly one, which has not been tested. We are still bullish in dollar yen, looking for a top around this zone. In order to confirm this top, we need evidence. Evidence is not here yet. First, we need to break this swing low, then this swing low. In order to, from higher highs and higher lows, we need to shift to lower lows and lower highs. So basically, this is all. You can practice, you can add the pivot points to your trading view and continue to practice different charts, different price action. If you have any questions, write us back. And looking forward to seeing some progress in your trading. Good luck for now. We'll be in touch again soon.